here we are, and a very good afternoon to you all. Welcome to the 1 o'clock edition of Realty Check. And now for a quick look at the main news for this hour. Steel sector may witness further price rise. A status report on Kolkata's new tourism destination, the East-West Metro Railway Corridor. Good afternoon, I'm Shubha Narayanan. First on this edition, let's see how the stocks are faring this hour. The BSE Sensex was trading at a little less than 13,379 points and has gone down by 91. Inflation rose to 11.89%, mainly due to the higher prices of essential food items and some manufactured products like cement and edible oils. This may prompt the Reserve Bank of India to further tighten money supply in its quarter review slated for the 29th July. The wholesale price index-based inflation went up on account of higher prices of fruits, vegetables, pulses, spices and bajra. Rising inflation may also force the RBI to further hike short-term interest rates as well as statutory deposit requirements when it reviews the credit policy later this month. Moving on now, the first quarter of the current fiscal is likely to be a mixed bag. Steel prices have gained on an average 60% since the start of this year. These prices were mainly driven by the spiraling cost of raw materials, higher international prices and good domestic demand. Ongoing measures from the government have so far had the minimum impact on controlling steel prices. Individually, companies like Tata Steel and SAIL saw better results than their peers despite inflation and rising input costs, as both companies have captive raw materials to bank on. With the expectation of good domestic demand scenario, the downside for steel price seems to be limited, whereas the potential for rising prices is very high in the coming months. To analyze these trends, we spoke to Mr. Kuljit Kataria, Vice President Commodities, Motilal Oswal. And let's take a look at that now. We've seen the ups and downs in the steel sector in the last quarter, that is April through June. And to give us more insights on this, we have with us Mr. Kuljit Kataria, the Vice President of the Commodity Sector from Motilal Oswal. Good afternoon, Kuljit.
Good afternoon, Shubha.
Okay, tell us now, in this scenario, what are the definite factors that could affect the growth and profits? Can you give us some guidelines here?
Major factors which are affecting growth and profits in steel sector basically is they are like raw material, iron, coke and power. And tightening of monetary policy is curbing also investments and expansion plans for the sector. But the major factor is pressure from a government to reduce product prices. These are the major things.
All right. So you're saying that the major problem is the government, the pressure that the government is putting to reduce the prices. Now, when inflation happens in the international countries, typically what they do is they pass on the rising input costs to the domestic level. Now, is that a strategy that is possible in India as well?
In this sector, it has no other option rather than to pass their input cost to the end consumer. In India, up to a certain extent, it is possible because firstly, the demand scenario is very good. Higher prices will easily absorb for at least 2 to 3 quarters. But on the other hand, if these costs are passed, then they would once again face government pressure to curb rising inflation.
Very true. Now, when is the slump in the figures expected to rise again? Now, will it end in the first quarter? What are your thoughts on this?
Slump in profitability figures is expected to rise once the above 3 factors start reversing. Moreover, improvement in global financial markets along with economical growth will also be required for macro point of view. It doesn't seem to end in the first quarter as of now, but certainly things would get much better after first quarter than they are as of now. As by then, monetary measures will also start showing its effect.
All right. Now, we all know that cost push is a global phenomenon. Now, how can this be translated into the Indian scenario, keeping in mind the growth inflationary figure?
In Indian scenario, passing input cost has become very sensitive case, especially since time when prices of steel products have become one of the major culprit in rising inflation figures. So steel companies need to find some more innovative strategies to make sure that rising input cost does not make a bigger hole in their financials. One of the strategies I would recommend is they should go for a hedging in input cost.
Okay. All right. Now, before we let you go, one last question here. Tell us how much this can affect the realty sector.
It should not be, overall sector will not be affected. You will see companies like Tata and other companies have major international sales, so this can be passed on to international customers.
All right. So you think that the realty sector has a bright future?
Definitely, yes.
All right. Thank you very much, Mr. Kataria, for the quick update.
Yep.
All right, time for a short break now. We'll come back and bring you more news from the real estate sector. Stay tuned. Hello there, you're watching Realty Check. Now for a report from Bangalore. Well, the city has been seeing changes in the office space realty. Now, what are the effects of these trends and what kind of an impact has it had on the office space realty market? In this report, let's take a look at the survey conducted by international property consultants, CB Richard Ellis.